All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for July 26, 2021. So let's start with the market health check once again. So today we had the PSAR flip, the RL10. In this case is we see that it was in the summer, got into the fall, reversed here at around 4:30. Crossed the baby dragon, entered the dragon, crossed the spine, left the river yesterday and today, crossed the dragon today. This is the beginning of trending behavior because you now have all three of the price elements out of the river. You have the price itself, which is out of the river. You have the RL30, which is out of the river, and that one's important. That one left the river way back here. So when the RL30 leaves the river, that's actually a really important moment. And the reason we think of that as the beginning of trending behavior is the following. Let me draw you just a quick flashcard on that. So, why is that not going to work? Come on. Okay, good. All right, so we know that the middle of the river is the 30-period simple moving average. And we know that the edge of the river is +1 and -1 SD. And that gives you fully 2/3 of the price action of the last 30 days is contained within ±1 standard deviation of the 30-period simple moving average. So then we have three pieces of price indicators. We have the price action itself. And then we have the RL10, which turns out to be a pretty smooth approximation of price. We call that the smoothed price. Also known as the trader's price. That's what we call it. And then the RL30 is an even smoother version of that, right? And the RL30 is the health of the trend. So what we're really going to do now is we're going to compare the RL30 with the simple 30-period moving average. And so this is the difference between a moving regression line versus a simple moving average. And the moving regression line is faster, more adaptive, and the simple moving average is slow. It lags. Well, when price is moving along inside the river, it's all inside here with the little price bar action, and you get the RL10 moving along kind of with it. Everything is just oozing along in the middle of the river. And the RL90 is going to be kind of smooth in the middle of that river too. So when things are sideways and choppy and there's no real follow through in one direction or the other, in other words, when there is no trend, then the 30 simple moving average and the RL30 are very close to each other. So as long as the RL30 is inside the river, then we can say that it's just mucking around in normal conditions. But then there comes a moment when price begins to depart the river, and we're going to get some kind of upward move. And when that happens, that RL10 leaves the river and links up with it. So there's a moment right here where the RL10 leaves the river and the price leaves the river. And all that's left to join it now is the RL30. So when the RL30 leaves the river, at that moment, we can say, that's the start of trending behavior. Right? So this, while it was moving up in here, it feels like a breakout has occurred because it left the river. But when the price and the RL10 and the RL30 have all left the river, that is the beginning of trending behavior. Right? So the beginning of trending behavior. When the price, the RL10, and the RL30 have all left the river. So that happens right here. And now, this is where we really start to see an abnormal move has occurred, because it is abnormal for the RL30 to have pulled. Look how far away it pulled away from the SMA 30. More than one standard deviation. That's how much. So that tells you, by definition, instead of mucking around inside here, it has left the river, and this is an abnormal behavior. It's a trending behavior. So we're looking for price, the RL10, and the RL30 with respect to the river. Where is it with respect to the river? If they're all outside of the river, then we say we've got trending behavior. Okay, so let's take a look at where the trending behavior occurred. Here's where, at this big blue dot, the RL10 and the price and the RL30 have all left the river. We can say that's the big, whoops, right there. That is the beginning of trending behavior. Now that trend is not over until all three of them come back into the river. Now, if you follow this, you notice that price rolled over, came back into the river. The RL10 came into the river. In fact, they all came down here near the Bollinger Band mean. But the the RL30 never got back into the river. It came close, but it stayed out of the river. This whole way up, it's saying upward trend. And here's the projection going forward. It's as steep as it's ever been. So the beginning of trending behavior in this last 30 days began basically 30 days ago. And then this was just a short-term aberration. And when you see that, that really makes the RLXD, or that price leaving the dragon, crossing the, leaving the river, that makes it excellent. And now I want you to notice where officially the trending behavior has occurred again. Right here is where the RL10 and the price both came out of the river. So once more, that trend is very healthy. And it did nothing but continue to raise up. Now, all the way through this little pullback, well, the RL10 came into the river. It only got halfway to the Bollinger Band mean, but the RL30 barely budged and then continued to go to the upside. So we've still got an uninterrupted trend to the upside. All of that is good. Okay, there's a couple other things I want to highlight for you here too. The first one, I want you to see the 1, 2, 3 entries. All right. So first of all, from this peak, and we've seen this analysis before, but it bears repeating. It sold off harshly down to this maximum excursion to the downside, which came, halfway past the Bollinger Band mean to close just above the edge of the river. And then you get bar 1, bar 2. Why is this bar 2? Because when it closed, it had made a higher low. That makes this a bar 2. And then when this third bar takes out the high of bar 2, then that becomes bar 3 with an entry at that blue dot. That blue dot is a 1, 2, 3 entry in this price action. So notice how you get that. You get a harsh, sell-off. And then you get bar 1, bar 2, and now bar 3 is live when it takes out the high of bar 2. Now let's take a look at this latest sell-off. It peaked here, sold off harshly for 3 or 4 days, gets down to the edge of the river, and then you have bar 1, bar 2, and bar 3. And this blue dot represents the 1, 2, 3 entry because you have a harsh sell-off in bar 1. This next bar is bar 2 because when it closed, it had made a higher low. And then that makes this one bar 3. And bar 3 made a new high. So you enter at the blue dot. It made that high without making a new low compared to bar 2. So the blue dot is a 1, 2, 3 entry. Now, the green dot in each of these patterns is the price crossing the dragon. In this case, it also left the river. In this case, price left the dragon right here. It had already crossed the river. But that's really when you're waiting for the confirmation, you get the green dot instead of the blue dot, which is a 1, 2, 3 entry. So one of the things that you might do is when you see a 1, 2 pattern, harsh sell-off and then a reversal that makes a lower high, the next day you set that up so that if it breaks out above the high, you can start with an intraday entry at blue, and then if it gets to green, then keep 20% of the day trade position as a swing trade, and then you're really happy about that. That also works down here too. You have a 1, 2, and then after the 2-bar setup, it opens and then takes it out. This makes a nice intraday trade, and it crossed the dragon and river. Here, you could keep 1/5 of that as a swing trade, and you're pretty happy about that all the way up. So, that's what I want to say about these excursions, the 2 days of recovery, the 1, 2, 3 entry, the crossing of the dragon entry, and then the symmetry between these two. Plus, I want to that lesson about the RL30 when it leaves the river is key because it's telling you that there is a strong trend underway, and that has manifested here. This feels like the start of leg 2, by the way. You have after the sell-off, you have leg 1 recovery, sell-off. Now leg 2 reaching to new highs. How high could that go, you ask? Reasonable. It went from a swing low of 414 to a swing high of 437, which is $23. So if we take the swing low of $22 and add 23, 445 is in play. And that means we're at 441. So there's still another 1% move in play, which is $5, which is more than one ATR to the upside. Would not be unusual. Let me know if you found that helpful in the chat box there, please. Okay. All right. So all other things being equal, we had the PSAR flip today. It's down around the Bollinger Band mean, and tomorrow that'll be at about 430 and a half. Also, the belly of the dragon is pretty close. So you have this nice cluster of support. Then you have the entire width of the dragon. For me, the top of the RL10, this feels like a legitimate support, which is like the 2-bar low. Like, I am not going to let it give back. I would not let it get below my 2-bar low at, like, say, 437. I'm going to keep that much of the green move for sure. I would not be offended if you decided that you wanted to keep the 1-bar low. Not offended at all. So now we made a new 10-day, 30-day, an all-time high and an all-time high close. And we're not quite to Z2. What is it going to take for me to add to that position? 1 penny above today's high. There's no resistance overhead. The dogs are so excited about that. You can hear them chiming in, right? The dogs are excited, so it must be good. Those two little knuckleheads. All right, let's look at the sectors. All right, so today we had the S&P at plus 0.25. The Dow was about equal with that at 0.24. The Qs lagged a little bit, a little troublesome, minus 0.08. Treasuries down 0.3. Emerging markets and all the globals just getting smashed at minus 1.9. Only the Russell did better today at 0.3, and that's only a fraction better than the market. So this was basically the U.S. and no other place to go. That's what that feels like. The sectors that outperformed, you have this cluster right in here that is oil, moonshots, lumber, and lumber between 0.4 and 0.6. And I would add finance in there too, right? So oil, moonshots, lumber, finance. Blended commodities, discretionary materials, precious metals, Mexico and Brazil up to 1.56. So you sort of have that standard usual suspects. The ones that really did well today, Simon Property Group, that's commercial real estate, 2.3. Agriculture, 2.34. Energy and oil exploration, 2.5 and 3. Then you have the blockchain at 7.5. And then a great big cluster up here. Great day to be in the digitals, the cryptos. Ethereum Trust up 18%. The large cap blended crypto 22%, and then the Bitcoin Trust 24.25%. Coinbase 9%. Now here's our cluster of industrials. Alcoa 5%. U.S. Steel 4.4%, Devon Energy 4%, Simon Property Space 3.5%, Tesla and Cliff. So Tesla managed to squeak back above 650. So I kind of watched that in increments of $25. So it's above 650. Let's see if it has any more legs. And then Cliff at 2%. I'm going to ask Ken H. How did your TX trade? I'm going to go take a look at that in a minute, but interested in if you had a chance to play that one today. I wanted to add that. I forgot to. Yeah, that's go back and listen to yesterday's trade frame on TX. Was that Ternium? And in our discussion of that as a preferred swing, that's not bad right there. That's a pretty good move. This is one that strikes me the 10-minute might be necessary to smooth it a little bit. Yeah, that gives you a real nice, the 10-minute gives you a nice smooth and orderly move on that one. You can see that this is yesterday's close. And then you can see this was also yesterday's close. And everything on that was up and to the right. And as long as that thing is north of the VWAP, that trend isn't over yet. That's pretty nice. Yeah, and that's the hourly charts for the last 20 or 30 days. That's pretty good. Here's a 3-month look. Yeah, baby. What are your questions? The free and clear. This is why we might be interested in materials and COTA 2s and SSCs. That's the SSC. Here's, I would call that the COTA 2. I guess to a lesser extent you might call that one a COTA 2. When it goes from spring to summer, you might really like that. Boy, that looks good. Don't let go of that one, Ken. Ride that one. They're doing something right. That's the weekly chart. They are doing something right. And that's the monthly. It has broken out to all-time highs. That's going on the list. So this is how you find specials. You could have made a nice living on this one going from 12 to 40 over the last 5 years or so, and then suddenly you're looking at it, oh my goodness, it broke out above 46. Where could it end? You tell me. We're printing money as fast as we can, and we need metal to rebuild infrastructure. TX. Yeah. That's how you find specials. All right, let's take a look at the underperformers. So the S&P was at a quarter. Consumer staples, 0.17, and lithium, 0.15. S&P Tech, fractional loss. Japan and clean energy, 0.35 and 0.55. ARC innovation, minus 0.6. The FANGs, 1.25. VXX, 1.6. That actually bodes well for tomorrow. Marijuana, 1.6. S&P Bio, 1.8. Now the individual companies that underperformed: Twitter, 4%. ARC Genomics, 2%. Squarespace and PayPal. I'm surprised by that. Down 0.76 and 0.56. I'm surprised they're down so big on a day when crypto exploded, since they do make money on crypto and have a great big asset base in both Bitcoin and Ethereum. So that's odd to me. Not sure what it means yet. So that's a quick look at the sectors. Let's look at the trades the guys made today. There's some good, really good ones. Good work inside here. This is a swing in mRNA Moderna. Ken took his profit in here. So he had opened that swing on the day chart like 3 days ago, 4 days ago-ish, on a continuation of that, riding that Z3 rail. And today it opened high and ran all the way up to a new Z3 excursion and then started to sell off. And he took the orderly sniper exit at 345-ish. So long at 320, probably had about a $10 risk on this thing, I'm thinking. Is that about right? $10? And so from 320 to about 340 on $10, that's about a 2 hour swing. Perfectly played. Now this is setting up for a potential recovery, like a Kata 2. Like, you don't mind re-entering this at 340 if you were able to sell it at 345 and then come back in. That's got some possibilities. The only concern I have there is that it's so steeply priced that this may not just be easy sailing right here. But I might be just tempted to take the 2 hours. So as an example, would you rather speculate by adding to this position tomorrow or entering that TX steel trade if it starts working tomorrow also? If I only had one trade to work and they were both working, I'd pick the TX in a heartbeat. This is the Bitcoin Trust. So Ken had the swing at the... How nice is this? Good Lord. Dude, that's just so good. Good things happening to bad people. So he's got the... he notices in Bitcoin Trust the harsh winter, crosses the baby dragon, enters the dragon, crosses the dragon, leaves the dragon, winter turns to spring, and he buys the price leaving the dragon, which is really the PSAR -1, enters here, and then gets a favorable treatment. And then adds a second position on the intraday as it fails to fail and starts moving out to a new high. He just buys it, and it continues to raise up. And he locks in the no lose plus dinner for 2 on the second position, while giving the second position the maximum room to flex tomorrow. So it just doesn't get much better than that. Here's Cliff. This is Luke. Well done, sir. He's getting his stop or his entry a little bit tighter now to the bend in the dragon and the crossing of the VWAP. That's pretty good on a basically when this stack collapses, he's short. He considered adding a second position where he should when it leaves the river and when it breaks the RL270, and now that it has closed the gap, he did not, and then immediately regrets it. And then he's so caught up in his own feelings of regret that he lets this thing maybe get too high and give back too much. Maybe this was a 1, 2, 3. Still, that's pretty good. And then his stop and reverse is a little slow, but I don't mind that because it was waffling. And once it crosses the RL270, he gets the reversal in, and it's on the correct side of the VWAP, so I don't mind that. And maybe he gave it a little extra room here and captured 0.7 and 1.5. He waits for it to cross the VWAP before he gets short. Now you got a high, a lower high in the dragon. The RL10 has a high and a lower high. And when you add that to the peak, you have a high, a lower high, a lower high, a lower high. This one could be as it crosses the dragon or crosses the VWAP and breaks the PSAR. But still, that's a pretty good. That's a pretty good short. This is slow on the capture because when this starts to reverse after this previous reversal, you're really thinking about this for your COTA 2 entry or your SSC entry. This is still pretty good. It's 0.2. You're getting paid. So close to the VWAP, he waits to see. It doesn't break. It reverses. It would have taken a real active will not to get short here, but that's pretty good. I'd like to see this one enter about a bar or two earlier, but that's a great entry and a pretty good exit. You waited for, you split the difference between the sniper and the manager, so that's pretty good, and that's 0.7. And then a couple fractional losses while you're trading inside the SQC, and this was a reasonable short. And that was a reasonable short. And the stops are pretty tightly managed. And then his re-entry picks up a nice 1R to pay for the ventures. And that's 3.5 for the day. So that's pretty good work. Pretty good day at work. This is TNA. This is Ken H. on some tactical trading on the intraday. He gets short here after the run-up. He plays this one short. Now, he's showing this short TNA. This is actually long TZA, the inverse, but it briefs well here. So he gets short and a cover, tries the SSC, takes the fractional, and then re-enters immediately and second position and makes about 1.8. So total net about 2.5 in here. So that's pretty good work. And then finally, the last one, Chi Weng Chong crushing it with the COTA 2 in Devon Energy. This is just so nice. This is really good. He notices, as we did, that the XLE is the strongest sector at the open, that Devon Energy and XOP were the first symbols in his stack with a frog box move, and so he gets a COTA 2 entry and crossing the VWAP and crossing the... So the whole thing is good. And he uses the bottom of the RL10. And first position, second position on the next on the next COTA 2. And yeah, it's more like an emerging dragon, but I'd still call that probably COTA 2 and a continuation. It's so close. And then he's tightening the position as the PSAR is moving up. It's not going anywhere, so he tightens it up, locks it in, just as enough is enough. No lose plus dinner for 2 for the second position, then all out. And that's some pretty good work right there. That total capture 2.3, execution R, and the same with XOP. So that's about 4.5 execution R, which is pretty much a weekly position sizing R, or half of his weekly bank. So that's pretty good work, fellas. Nice job. Next one up. Let's go to the first dashboard. So we are still in bullish normal. Overbought everywhere. The ADX is starting to show strength. It was below 15 and then reversed back above 15, and the bulls are in charge, so that's a very strong sign. The red bullish has become yellow bullish, so that's slowly getting better. Risk Z has rounded off, and it looks like it's trying to find support from a lower low, which makes us want to believe in the possibility of a spring to the upside. And I like the old school tech like Cisco and Microsoft in here. Pretty good stuff. Handful of dojis in the Dow today. let that come up on your screen. Yeah, handful of dojis in the Dow. No other real patterns, with the exception of like a 551W in Travelers, which tests out at 3.2 to 1. That's pretty good. But Cisco made a 10-day, 1-month, 3-month, 6-month breakout. That's pretty good. And still quite a few auto framers for the catch-up trades. In the ETF tactical, we had a little bit more of a directionality today. Again, only 4 dojis. 3 of them very significant to me. The Russell, the small caps, the mid caps, and the real estate. So they have been weaker than the S&P, and now they are poised to do something. So let's see tomorrow what that might be. I'm intrigued by this one in emerging markets. That's just the anomaly. But the Qs were very strong today. SPY was very strong today on the big breakouts. So you got to like that. And then energy, oil exploration, metals and mining. And then, of course, just the blockchain is making some people very, very happy. So my daughters had put some of their student loan money into the Ethereum at a price advantage and locked it in. They staked their claim, so they're getting paid 8% just to keep their money in there and lock it up. And now and then the price is back in the green, so they'll never sell. Now that they've understood what it's like to ride out a swing to the downside, they will never sell that. Diamond hands they have. All right, here's the framing data for our auto framers. Everything that's better than 2 to 1 with all the key price data. I'm still liking the opportunity in emerging markets. That just really stands out to me. Treasuries, I suppose, is more attractive than the precious metals. And then oil and energy and then oil exploration are still, despite today's gains, are still got some room to play. So I like that. A couple daily squeezes. Anytime I see S&P, that tells me the market is under tension and ready to break large in either direction. So I like that. And I like that mid caps are in that condition also. Let's just go right to the NDX. Today it was Cisco. And then in the ETFs, the NASDAQ, the diamonds, the SPY, and the consumer discretionary. That's like safe U.S. large cap growth. You should love that. We might be taking a look at that triple Dow. The UDOW is probably should be on our mind. And again, that's the anomaly of emerging markets. That's got to be tradable. That impulse has to be tradable. There's either something structurally wrong over there, or this was just weak hands getting punished and getting ready for a sharp reversal. So that feels like it should be a critical state, and we want to investigate that. So let me see what we can see here. I'll just go to my default daily. Yeah. So we talked about this one the last time it was at a critical state. We pointed out this one, and it went up, and then as it was collapsing, we said, "Hey, this is where it could go to," and it did. And we said, if it fails out of here, it could go to this level, and it's already below there. So, Jiminy crickets, what an opportunity in there! I just think we could play this one right here at the first. I'm not even going to wait for it to break out above that, the high of the day. If that thing breaks above 51, I'm just going to buy it with about $1 risk And I just have to believe that it wants to, that it's going to close this gap. That's what I think it's going to do. At least that's what I'm going to bet that it does. That's my risk to reward to the upside, just on a closure of the gap. This last one over here is what that looked like when it finally closed that gap. Gave you this kind of a move. Come on, rectangle, draw for me. It made that kind of a move after the last gap closure. And how big is that? Almost to the penny. The kind of move that I think it could make this time. So anytime we see those exaggerated moves down, like pushing Z3, crushing it. Let's see it crush. Now, if that fails, where is it going to go? Well, the next one it's going to go to is way over here. This entire cluster, we'll just call this, I'm going to draw that box between the PSAR flips, all right? And I'm going to say that that's the range that it could get into right in here. Hold on. Let me tighten that up, like right in there. I think that's where the downside target is if that fails. So if that fails out of that little critical state box that we have right there, I think the target is like $50. So that's a nice critical state. I love that. Let's go. Take the break in either direction is what I'm going to do. I wouldn't do that if I was you. Don't take my word for it. Do your own due diligence, but that's what I'm setting up. And I just say that because that anomaly, that's the only thing that is horrible in the world. It doesn't feel right. I mean, the EAFE index is not bad comparatively, and Europe is fine. And, Japan is showing a little bit of weakness here. I acknowledge that. And looking for, that's maybe, I know there's some weakness in China, but I like emerging markets as a tactical play. Yeah, Hong Kong always in trouble. All right, that's everything we got for today. We will get this published and posted and be ready to go tomorrow. Take good care, guys, and we shall see you.